debit card transaction, also companies allow debit card in this purchase. Bank transfers the fund from the customer's account to the vendor's bank account. So like I said, this is a cash transfer. Okay, so the bank charges the vendor. Okay, it's not the Visa company, it's not the credit companies, it's the bank for the transfer, and that's, like I said, very minimum. Okay, and of course it's recorded like this. So instead of cash and credit card expense, say cash and debit card expense, same thing. You just put whatever expense you calculate and put it there. Okay, the last part we have after the petty cash is this one, okay, which is bank reconciliation. And this, like I said, it is performed by all companies, okay? At a certain time, at the end, usually at the end of each month, we do bank reconciliation, okay? So bank reconciliation is prepared periodically, just like I said, mostly monthly. Some companies, they have bigger transactions, more transactions, they might do it weekly at the end of the week, okay? What's the goal of it? To explain the difference between the cash reported on the bank statement and the cash balance on my books. Okay, meaning you have the cash ledger, right? You remember the ledger. You used to do the journal entries, and then you put it here. So that's the thing, and then you have, that's the date, and then you had debit, credit, balance, right? That's not the next thing. That's good. So you would have recorded debit here, credit, credit, debit, and every time the balance is showing. What's happening to the balance? What's happening to the balance? What's happening to the balance? Okay, so now you have the balance on your book. Whatever you did, whatever journal entry you did, okay, you did this, right? So this would show your balance of cash. That's the book. That's the company book. That's the cash ledger in your company, right? And at the end of each month, right, you have a bank statement. What does the bank statement show? What do you have in the bank? You have cash, right? So the bank statement is supposed to show you also the balance of cash. So now you have this balance in your book, which shows $58,365. And the statement came from the bank showing that you have $63,015. What? Right? Reconciliation is the process of looking where is the difference. What can be the difference here? Very simple one, for example. I gave checks. Okay? I bought stuff from suppliers. I gave checks. A check to Les, a check to Jerry, a check to Davi, a check to Sona, right? I gave checks. Now, these people, some of them went and cashed their checks. Some did not yet. They didn't go to the bank yet. Okay? And the bank issued the statement before they cashed their checks. For me, whenever I issue the check, I right away write in my journal and post it, post it, post it. For me, this is money gone from the company. Did it go already from the bank? No, it did not. So this shows a difference. That's one simple reason, for example, why there might be a difference between the bank statement and the cash or the book statement, the balances. Clear? This is one of the reasons, one of the things that you're going to check and fix. Okay? Simply, you gave checks. Some people did not cash it yet. So for the bank, the money is still there. No money is gone from your balance. For me, I gave the check. This is money paid. Okay, clear? So one important element of internal control, okay? These you need to know to figure out what's happening on each side, okay? So the example I just gave you is this, outstanding checks, meaning what is an outstanding check? I gave the check, the person didn't go to the bank and cash it. So it's an outstanding check, okay? Another thing that affects the bank statement, deposit in transit, meaning today is 31st of March, okay? The bank issued the statement of March on the 31st at the end of the day. At the end of the day, also at 5 or even after 5, you worked in the company, then you finished work at 5, and you went to the bank, you went to the ATM machine, and you are depositing money. You put the money in the machine, and you deposited $1,000 for the company. Now, for you, you recorded this on the 31st of March before you left the company. Is it showing on this statement of the bank? Of course not, right? So that's deposit in transit. So you made a deposit. It's opposite to this. Outstanding checks, money did not go off your bank account. Deposit in transit, money is not showing yet in your account. It's still in the machine. They will open tomorrow and they look at it, and then they will see what time you put it in the machine. And so for you, that will be fixed. Any errors, bank errors, can be plus, minus. They make errors. So there's a check that's 1,000, they recorded 900 or 1,100. So plus 100, minus 100, you have, oh, okay. So this is bank error and can be a book error as well. Okay. Another thing, this is from the ledger side. Like we said, bank errors, okay, or book errors. So book errors means the accountant recorded something wrong. So in the bank, they took the check, the check reads 1,000. For you, the accountant recorded 100. He just missed 1 0. Okay, so that's a book error. You have to fix it. Okay. Another thing is NSF, non-sufficient funds check. What is a non-sufficient fund? Jerry gave me a check for purchases he made. For me, I recorded the check in my book and I transferred it in my ledger as what? Cash in, right? I made an entry saying cash, accounts receivable. For me, this is money recorded, cash in. I sent the cash to the bank. When the statement came saying that, you know what, this check bounced, Jerry doesn't have money, right? So that shows a difference. That 3,000 that I recorded in, it actually is not in. The bank said, no, this came back. You don't have 3,000. Go back to Jerry and ask him to pay you somehow or put money in the bank and then send another check. So that's another thing in the book side. Okay. The statement came and you see that, oh, it's the monthly charge for the bank. So I only saw it in the statement when it came to me. So, okay, I should reduce my balance here by 50. Okay. Sometimes you have like money put in the bank in a saving account or whatever. So you have interest. So you see it in the book statement saying that interest is added to you, $150 interest is added. Okay. Sometimes the bank does collections for you. You have a notes receivable. You don't want to deal with Sona. She's trouble. I don't want to call her every day and ask for my money. I give the note receivable to the bank, and the bank will collect it for me. Okay, or the bank will give me the money and charge me for that. So I don't know about it until I see. So these things are things that I need to look at to see the difference between the bank statement and the book statement. If I deal with all these, then my balance that I showed in here will equal my book balance. Okay? This is the whole idea of reconciliation. We do this to match the bank statement balance with the book balance. These are terms used in this. So CM credit memo, DM debit memo, EC error correction, IN interest earned, NSF we said not sufficient funds, OD over SC service charge. Okay, so usually you have it written like it's told to you, right? But it's good to know them, right? So this is a sample of a bank statement. Okay, so it provides information about everything that has gone through the bank account for a given period of time. Usually, like I said, this is monthly. Okay, so statement date is 31st of October, whatever the year is. Okay, and then you see here, that's the previous balance, which is the balance of last month. That's your current balance. That's the summary. And see here, this is what happened to your account there, and see this is your balance. See, this is a summary of what they give you on top. This is the total deposits. This is the total checks and debits. See here, debit memo, NSF, debit memo, interest, right? So this is a sample of the bank statement. So look here, we do compare, like in the assignments, you will have something like this, and you do compare. Okay, so look here. These items appear on both the cash receipts journal and the bank statement. Okay, so these are not reconciliation items, meaning you see, okay, this is there, like I have it, the bank has it, I have it, so this is what you compare to see. Okay, look at these also, I'm comparing checks. This check 119, 119, 120, well, this is 120. But see, these are not in orders. For me, I issued the checks in order, right? So this is 19, then 123 is showing in the bank. Why? 119 went, then nobody went, 123 went to the bank. 127, 122, 120. So I'm comparing this check. Okay, it's appearing there. 120, this is 120. 121, this is 121. So I compared first deposits amounts, whatever I deposited. Okay, this is showing, this is showing, this is showing, this is showing, this is not showing. You see, it's still white. So it's showing, then they don't need to be reconciled. And then I compare the checks. These are my deposits, these are my checks given. This is showing, this is showing, this is showing, so they are not treated. They are not items for reconciliation, okay? So whatever was not showing here, see the 145 is not showing. See this? 124, 126 is not showing in here in the list of checks, right? So these items appear only in the cash receipts journal or the cash reimbursement journal on the bank statement. These should be what? Items for reconciliation. Okay, so it's a matter of comparison. So this check is not there yet. So it's what did we call this? Outstanding check, outstanding check, outstanding check. Okay. Or non-sufficient funds. So a check I received, the bank said you have no money because the check bounced back. Okay. So when I look here at the book side balance, we add any collection the bank did for me. Okay. So the bank collected a note for me of this much. He charged me for collecting it. So it became what? For 48.5. Interest, I made an interest, $8.42. So these I'm adding to what? To the bank balance. Things I'm not aware of. I didn't know that the bank collected this note for me. He said we collected and we charged you 15. So I record to the bank account, to the bank balance. I'm adding the 485. He said you earned interest this much. So this much I add. This plus this is 493.40. I added to this. Minus. He said NSF $30 bounced back. So for me, I enter $30. Now I should cancel it. There is no $30 in my bank account from that check, right? I ordered checkbook. So they said, we are printing the checkbook for you. This is your book, and we are charging you $23 for it. So this is how much they are charging me, or things that I don't have, I should subtract. Okay, so this is added, this became the balance. This is subtracted. Now this is the balance. Okay. And then I work on the bank reconciliation, the bank balance. This is the balance. I'm adding what? Deposit in transit. So this is a deposit I made. Like I said, I took it to the ATM machine. It was done late. It's not showing. So I should add that. Okay, the bank is missing this. It should show in their statement. I know that it should be there. And then outstanding checks. These checks, I issued them. These people didn't care to go and collect their 150 and 200. So I should take it off my balance in the bank. People will go and collect it, right? So I added this, became this much. I subtracted this, became what? 1,845, right? Look at it here. I'll go back. See here, 1845. What's that? That's my book. And what is to the bank? 1845. So after I did the reconciliation, this one started with 2050, became 1845. This one started with 1404, became 1845. So in this case, at the end, I do have what? They are balanced. This is what I did. Usually we do it like this. But it was showing you each side only. See, this is the 2050. I added the cash in deposit. I took these off the balance because these are outstanding checks. Here, I added the note collected. I added the interest earned for me. I took off the charges. I took off the NSF, right? So this is my balance, and this is the bank
Mr.
balance.
Ali?
All is good. Yes,
Can I have one question?
sure.
Okay, so here is the outstanding checks 124 and 126. Suppose they are like deposit the check next month. So we have to add in next month in a reconciliation, right?
No, for me, this is next month they will show in the bank, but for me,
Oh.
I will deal with them next month in that statement.
Okay,
The
so
bank will
next
show,
month.
the
Uh-huh.
bank will show plus. I should say no. This is actually taken care of last time,
Okay.
right? Because there's no check for me that was issued this
Yeah.
month, and they're showing next month. Okay.
So in our books, like when we are doing in our books, so we have to
It will be
we also have
subtracted.
to do in,
Yes.
and next
Next
month
month
we
it will
have
be
to add in
subtracted.
our books.
Yes.
Okay.
Yeah. But usually we're doing it like for 1 month. We don't roll it to another month. So we're just dealing with it right now. But your
Okay.
question is, okay, what happens next?
Yeah.
Okay, guys.